And so let's go to Dan Geltrude, Geltrude and Company founder. Dan, I'm looking for maybe pockets of where money might be going. Gold a little bit. It's certainly not Bitcoin. It's certainly not any of these other plays. Even some of the dividend paying or those stocks that are more pegged to being something that consumers need, like Kellogg comes to mind. That stock was climbing when it raised its sales growth forecast, but that reminds you that the consumer might hold back on auto purchases and the rest, but when it comes to cereal and basic staples, they're not there yet. So is there a dividing line on the part of average folks at what they'll pay for versus what they won't?
Yeah, I think there is, Neil. When we're talking about inflation that is really now biting at the American people in terms of starting to make decisions of, I'm going to pay for this because I need it. I may want this, but I have to hold back because I really need to be able to pay for the necessities. And it's an unfortunate situation that we've arrived here. I've said many times, we are in this situation, Neil, not because of interest rates. It's due to the fact that we have not had good economic policies. The Fed was late out of the gate. We already know that. But it was the administration who really didn't recognize what was happening. Inflation is not going to be transitory, and we have too much demand and not enough supply. The administration kept going after the demand side and saying, pump more money in, pump more money in. And now that's where we've arrived, where we are now.
Dan, I'm looking as I'm talking to all of you smart guys, where money might be going. Today, maybe to gold, certainly to oil. We'll be exploring that with Jackie DeAngelis in just a second. But, I don't know whether this is like a capitulation when there's no place to go, no place to hide. So could I ask you your definition of capitulation?
Well, Neil, I think capitulation for most people right now is to actually do nothing, to just sit back and say there's so much turmoil going on right now in that balance between fear and greed in the market, because that's what I see playing out right now between yesterday and today. So capitulation to me is do nothing and wait and see how this all plays out.
So when I'm looking at Bitcoin, a lot of the other crypto plays, they're all getting hammered after Bitcoin had a good day yesterday. That haven doesn't appear to be much of one. And I get different vibes out of California where they're welcoming such investments, but also policing those investments. So double-edged sword. What do you make of that?
Well, yeah, Neil, I think that there's a lot of people out there that would play the market wrong and basically run out right now, whether they're going to run to gold, they're not running to Bitcoin, or they're going to try to move to safety in some way, perhaps even going to bonds, even though I think being at 3% over 10 years is not the place to go, particularly the way inflation is going, Neil. But that's what I see happening right now.
Well, what if that
I
gets
just
to
think
5
that right now
or
there's
6% then? I mean, that then feeds the argument and maybe explains why technology stocks in particular are getting hammered, that interest rates could be rising enough to be competition for such investments. What do you think?
Well, it could be, but something, the Fed doesn't seem to be as hawkish as they were first putting it out there, right? Yeah. The fact that they're saying, well, we're going to be at 50 basis points, 75, not so much, to me, Neil, they're getting quite dovish. I don't believe they've handled this properly from the beginning. But yes, if we're going to get to interest rates at 5-6%, we're in that category. Yeah, then I think there's going to be a lot of movement and the market's really going to feel it.
Finally, very quickly on real estate, and that has not been part of this. We have, interest rates, 30-year fixed mortgages, a little north of 5.25%. That's the highest level we've seen since August 2009. I think we kind of remember what was going on back then. Are we heading back to that?
Neil, what's happening in real estate is really interesting right now because as interest rates are going up, you would expect that prices would start coming down. But the supply is so thin, we really have a perfect storm going the wrong way for home buyers in terms of high prices, high interest rates. So I don't know if we're quite ready to go back to what your mortgage rate was back in the day, but I think rates are going to continue to go up for a while, that's for sure.
Do you ever throw up your arms when you see that cannabis stocks are also getting hammered? So even people wanting to get high don't have a retreat. Or maybe they do because it's cheaper.
Yeah, I've never been a fan of cannabis stocks, Neil. I've said from the beginning, I was just talking about this yesterday.
Yeah.
I don't see a way where cannabis companies are truly ever going to be profitable. I think people got caught up in the high of something new, but I actually don't think that that's a good investment.
I see what you did there, caught up in the high of something new. Gnarly, dude. But barring that, Dan, one of the things I worry about is whether we appreciate some of the differences, too. We're starting from a much stronger economic level than, that particular period saw. Does that give you any saving grace there?
Well, I think we're in a better position, Neil, than we were back in the 70s. I don't think there's any doubt about that. However, people aren't thinking about the 70s. They're thinking about right now and what it means. And the thing that I really get concerned about related to our economy is if we're going to continue to have the Fed raising rates, as Luke was talking about, and that starts to take down demand. What about all those businesses out there, Neil, that really depend upon debt in order to keep their business going or to be able to grow their business? Their inability to borrow at a reasonable rate is really going to be problematic for a lot of small businesses out there. And I think that's going to cause a lot of hurt across the board economically.
Man, I want to go to Dan Geltrude right now on a couple of quick things, and actually akin to what Steve was just saying, Dan, this idea that, Washington is going to come, we got to fix something, we got to do something in response. And sometimes, to Steve's fine point, sometimes the better part of valor is to not do anything at all. But I don't know if Washington is going to take that cue. Sometimes in desperate times, you get the bigger government advocates, FDR comes to mind, where we're going to go full throttle. And I'm just wondering, whatever you think of that approach, whether that could be next.
I think one of the things that government can do, and not that I disagree with a lot of what Steve is saying, I think he's on point, but how about we start moving towards energy independence and start having some deregulation related to the oil industry? I think that's one of the things that's really fueling this inflation relates to how much oil is costing us, again, because we've decided to push that responsibility to our If the Biden administration would say, listen, we need to bring down inflation, and we're going to do it by starting to take down regulation and allow our American companies to start drilling again and producing oil.
But wouldn't we still, maybe not as much to your point, but wouldn't we still be in this pickle given the global environment, the supply chain disruptions, what's going on in Ukraine? Believe me, I'm not in the camp that says all of that is why we're in this, but that there's only so much mitigate.
That's not the complete answer, Neil. Look, there's so many things that have gone into this. Look, China's a problem because they're locking down. Obviously, the war, Ukraine, big problem. However, there are things that can be done. Look, when Washington started to go down the road of saying we need minimum wage rates to be increased dramatically. Well, lo and behold, the market just naturally moved wages as it needed to. So that was something that the government could have moved away from instead of trying to force the issue of getting wages to go higher. Why? By going in competition with small businesses by paying people to stay home during the pandemic.
Thank you, my friend. Dan Geltrude.